Of course, it is Thursday. I can't believe how fast this week has gone. Every Tuesday and Thursday, we are joined by Tim Ord. We really appreciate his analysis. Gives us some great insights into what might be developing within the market. You can additionally go to TFNN.com and go to our services tab and check out 2 fantastic webinars from Tim Ord. Tim, how are you doing?
Good. Can you see my chart?
I can. Looking good.
Right.
We're getting this working, huh?
I guess so. So live and learn. So
that's right.
But anyhow, let's take a quick look, kind of what the bigger picture is kind of looking like. And these are all trend day averages. The top one's a 10-day. The next one down is a 5-day. Next one down lower is 2-day. Bottom is a 3-day. And none of them are really into the bullish levels yet. Panic always forms at bottoms. If you don't have panic, you don't have a bottom. The market still bounce, but it's not going to be a lasting bounce. And I think that's what's kind of going on here. But we need the trend, the 10-day trend, which is basically 2 days of trend readings. You need it up around 1.2. And currently we're at, if you notice right here, 1.12, getting close. So I think any pullback will push that 10-day trend up to around 1.2 or even higher. So I don't think this rally is going to continue. I think this is kind of actually, I'll show you what it is.
Yeah.
So we'll flip to another chart here. Probably I should have cleaned this chart up a little bit, but this is the kind of the current time frame going back to April 1st. April 1st is there. And today's trading is right here. I noted that we might fill the gap, which is that gap off of this high, which is April 2nd.
Yes.
And so we want to fill that gap. And I thought that was a possibility. But, what's going on here, if you notice, we had a gap down there, which is one gap. Then we had another gap right here. You can, right here. Then we had a kind of exhaustion gap here. Then it came back and filled it pretty quick. But that's called a 3-gap play to the downside. 3-gap plays to the downside have an upside target to where the first gap began.
I see.
And if you remember, we got long this day right here, and we actually sold out this day right here, and that was a 9.52% gain. But it got back to that first gap, and that's what the pattern suggested. Well, if you notice, we got a gap right here. We got another gap right here, and today we gapped. So we got another 3-gap play to the upside. 3-gap plays again to the upside. The last one was to the downside. Have a downside target to where the pattern began, which is basically pretty close to 510 area. So that's where we're probably going to head. And today's volume is going to be pretty important here. This volume is really low here.
Yes.
And I thought we like to touch this high right here, which is the April 2nd high. And we may not do it today, but we may do it tomorrow. And that may complete the pattern. Then from there, we're probably going to go back down the gap. Can we go all the way back down to this low, but down here to the April 7th low? That's a possibility. All the pattern does say we go back to where the first gap appeared. So we'll at least get back to 510. Will we get back down to close to 480? I don't know. Depends on this decline that's coming. Do we get a sell signal here? Not quite yet. Bottoms are a lot easier to pick out than tops. And I was hoping to see some really tickerings. Best trade days usually Fridays.
Yeah.
And so this market may try to touch this gap or touch this high right here and then start the pullback. So I'll see. As it sits right now, I really don't have a really great setup other than, if the 3-gap play could fail, you don't know. I like other indicators to support that idea we're going to get the pullback. But, basically from 560 down to 510 is a 10% pullback, or actually a little bit better than that.
Right.
And we may even take a shot at 480. So it's a worthwhile play if I get the confirmation. But if we don't, we'll end up with a buy signal probably anywhere from here to here. So not a big hurry. We'll see how the trade goes. But it's looking like it may form. So we'll kind of have to wait. So, but it's 3-gap play. Three-gap plays are pretty reliable. They're kind of rare. You don't see them very much. I don't think last year we even had one of them, and we actually got two in a row here. The first one worked out perfectly. Will the second work out perfectly? We'll have to wait and see. But May, there's the old saying, sell in May, go away. And we'll see how that develops. It might go about. However, the bigger trend is turning up, but we don't have the panic again in the trend to suggest a prolonged rally to the upside. So we don't have the energy, according to the trend readings, to really suggest this rally is going to keep going. So I'm not a big bear here, but the next pullback, especially if you get the trend up around 1.5, 2, 3, that would be quite a bit of confirmation that you could really load the boat up, I guess you might say, on the next pullback. But if the trend barely comes in around 1.2, then that will suggest not as strong as rally, would imply maybe we just go back up to around 560 again, 570, which is basically this high up here again, and we develop a trading range. So we'll see how much panic we get on the next potential pullback. So
if we get a massive amount of because we've been talking about, at least on the day, there's been some paltry volume in this movement to the upside. If you get another mass amount of energy to the downside here, I mean, what can that tell you? That they want these kind of lower prices, and we maybe hover midway, maybe like 520, 540?
Well, if you get if volume gradually increases to the downside, that's real dangerous, because that can keep going. But if it's all of a sudden a big spike out of nowhere, where the volume at least doubles, if not triples, compared to the previous days before. We didn't quite have that on this kind, but normally bottoms, if you look especially on the weekly times, they stick out like a finger.
Totally.
And once you see that, that's an exhaust move to the downside. Things went too fast, too far to the downside, and we really don't have any fingers here. But I thought this low, this April 7th low might be tested, because if you notice, that's the highest volume going back to February here.
Right.
So I thought that low might be tested. It doesn't have to, but we have to get through the April 9th low here, which also had high volume, if you notice right there.
Yeah.
So that would take that much energy, which is basically close to 250 million shares, to get through that low. Anything less is a false breakout to the downside, and normally that's when the bicycle starts to develop. So as the market goes, if you notice today, yesterday we had a big volume compared to today.
Yes.
That implies today's a false breakout to the upside.
I see.
So
fantastic. Yeah, Tim, let's talk some more about this. Folks, if you stay right there, we'll be right back with Tim Ord after the break. Welcome back, everybody. Jacob Shoup, you're watching the Tom O'Brien Show. We're joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, we were looking at, I believe you called it the three-gap pattern? Three-gap play?
Yeah, it's called a three-gap play. They have them up, they have them down, and kind of explain it. So let's go to chart 3 here. Anyhow, the dark shaded areas, pink shaded areas where the gap forms, so they don't have to be. They have to be pretty concurrent, I guess. They have to, not like one day after another day with a gap, but they have to, if this gap appeared another week later, then it wouldn't be, but it appeared pretty close to, I don't know. It is a tree gap play, and they do have a downside target to where they began, which is basically a 510 area. But these are the areas I'm watching for the pullback, which is basically this low right here, which is right where the gap is. Then after that is this low right here, because it had huge volume. It'll take 241 million shares was that day. To get through that day, you have to have 241 million shares. So that could be support, and so this low may not even be touched, this is over 250. But if you notice right here, this low here, I seen it. You see that volume right here?
Yes.
Well, it tested this day low right here. And if you check the volume on that day, it's right there. So you can see this low day right here had light volume. That's the reason why that had support. So you tested previous low on about half the volume.
Right.
But we didn't have a trend to go with it. It didn't have panic, so I didn't trade it. But we went up. We filled the gap. maybe we'll go up and touch this high tomorrow. If we don't, then I think the uptrend's done. Then we start the pullback. So either we get a bicycle here, we get a bicycle here, or we get a bicycle here, or we maybe go back down to so one of those four. And it may support here, go up and come back down. I don't know. We'll have to wait and see. But I think it's going to become a sloppy market. So you're going to have to, you can't get in like we did last year. You get in on a trade and you stay a month or two.
Yeah.
Here, I don't think that's going to happen. You're going to, the last trade I got long here, got out here. So that was almost a day trade. But, 9.5% is hard to pass up. So, but anyhow, so I don't know how, those are the four areas to the downside. And wherever has the most panic, that's the one I'll buy. So we'll have to wait and see how that pullback goes. So that's for the equity market.
Fantastic.
We're going to skip to the gold market.
Yeah, please. So, I know we talk about the GDX, but you have the gold contract right now off about 2.55%. What is the GDX itself, huh? Yeah, we're trading off about 3.74%. And this is kind of what you were saying too, Tim, which is wild,
Yeah, this is we can go right here first.
Yeah, sure.
This is a small trend. This is 3 drives to the top pattern. How you identify them is after the second top, it retraces at least 61.8% retracement of the previous rally up, which is basically this is previous rally up, retrace back down to over 61.8%, and the volume has to increase. And it did. You see a big spike in volume to the downside. Yep. Actually, that's the exhaustion volume. That's when you get the buy signals here, because the volume really jumped compared to the previous days, 100% there. So that's the reason why you knew we were talking, I think, about on this pullback, because he had an exhaustion volume, and that should lead to a third top. And that's exactly what happened. We went up here, and now we're in the process of a 3 drives to the top pattern. Anyhow, it's 3 higher highs. The second high has to be a 61.8% retracement or more, and the volume has to increase. Then you go up to a third high, and that's when you sell it. You don't give you actually I thought we'd get it around 50, maybe 52, and it's pretty much close to where we did. I got right around smidge below, I think it was 49.66 where I got out.
Yeah. And
now I'm looking to buy back 3 drives to top pattern, have a downside target to where the pattern began, which is around 39. Bigger trends up. But they're going to scare a bunch of people to the downside. And on the 3 drives to the top pattern, they're not a long-term topping pattern. How the book says it's a timeout in an uptrend. So this is just a big shakeout to get the weak hands out. Then the next rally begins. And the next rally is probably going to even be stronger than the one we currently had going into this high. Mm-hmm. So, but they're going to shake you up a little bit. I don't know where the low will be. This could take a while. I'm thinking end of May, June, sometime. Because you got consolidations, market try a rally, and do all whatever it needs to do. But it'll probably, I'm thinking you will see a June bottom of some sort, and the rally will start in July or something. Then new highs. So here's the chart. This is the monthly GDX, and the reason why I got out, you can't really see the 3 drives to the top pattern here. But if you get on the monthly time frame, if you get 80% above the upper Bollinger Band, which I was kind of eyeballing it, and I was up around 50, I'm thinking that's about 80%. And so I got out. You can see the previous one. This is about 100% above the upper Bollinger Band. This is about 80%. This is close to 80%. So that's the reason why I got out. Because the monthly charts rule the weekly charts rule the daily charts. And so this is a monthly kind of a sell signal. And if you look, support comes in right around 40 area, which is close to that 39. So I thought that was interesting. But this is just a jump above some signs of strength above some previous highs. A lot of times you come back down, test those highs before you actually start moving higher. Sure. So in the bigger scheme of things, there's nothing, in my opinion, to worry about. I think we're still really early in the gold stock or in the silver stock scenario. So I think we got months, if not years, for this rally to continue. I'm not sure if I have that chart. Yeah. Actually, we'll just get to it, I guess. This is a chart that probably will help pick out the next significant high or major high. This is a monthly silver-gold ratio. I did a silver-gold instead of gold-silver because it kind of, I don't know, works better for me.
Sure.
But anyhow, anything below over here, this is kind of, anything below looks like about 0.013 is bullish, and the lowest it gets is 0.01 or 0.010, and that's where we are right now. We're at actually about the lows you get, which was yesterday. This is a monthly chart. So this, the monthly silver gold ratio is actually a really good buy right now. So,
absolutely. Do you have more you want to talk about on this chart, Tim?
Yep.
Perfect.
Yep. We got.
Awesome deal. Yeah, Tim, please stay right there, folks. We'll be right back with Tim Ord after the. Welcome back, everybody. Jacob Shoup, watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle, taking a look at that silver gold ratio. Yeah, Tim, what more do you have to say on that? Because really, silver has it has not been moving with gold in the way that a lot of people anticipate.
Yeah, it's not. So, but according to this chart, it's about the cheapest it gets. Normally in bull markets, silver stocks outperform gold stocks. So far that has not happened, but I think it's going to come to the forefront. But eventually, this ratio will get up to. It looks like this is 0.018. That's kind of the danger level, I guess you might say, and that's where previous highs have happened. Happened up here, happened at the 2012 high. For some reason, it didn't work there, but back here really can't tell. That was kind of a high. Did get a. Actually, I didn't mark that, but that probably marked that low right there. So, and it picked out this high right here. I didn't record that. But this ratio eventually will get 1.8. That'll probably put the kibosh to the uptrend. But I think we're a long ways away from that. It's I got cycle work that comes in 2027. Then I got some other cycle work that says this gold issues will outperform the NASDAQ or the equity issues for the next 12 years. So, but anyhow, on a short-term basis here, even though we are having a pullback on GDX, and we may get down to 30 sometime in June, maybe possibly July, buy the pullbacks. If you can find stocks that had support, and the next rally up, a lot of these smaller ones that haven't rallied yet are going to start to perform.
Yeah.
And it'll be a frenzy at the end, and I don't know what the end will be, but it will be quite a ways. So this is probably the last penny market that's out there that I know of, because most of these gold stocks and silver stocks are just decimated.
Sure.
And a lot of these gold companies, if they can get an ounce of silver or an ounce of gold out of the ground, their profit's huge. And so that hasn't been reflected in the price of stock yet, but at some point it will. So anyhow, I thought we had another chart here, but that's the same chart. So I mistakenly, I think I was going to produce the HUI gold ratio.
Yes.
But that's where this chart should have been. So this one. So
well, that's all right.
For some reason, I didn't put it in, so I'm sorry about that.
No, that's totally cool. Of course, we can always go over it Tuesday as well. But a lot of interesting stuff happening here. Really, that call on the GDX I think was fantastic. And again, guys, you can go to ord-oracle.com. You can check out the newsletter and his book right there. I really appreciate it, Tim.
All right. So we'll talk to you next Tuesday, I guess, then.
Sounds good, Tim.
So, unless you got some questions or something, and we can answer some questions.
Well, give me a second here. I think someone did bring up, now, there wasn't a question necessarily, but someone said that they had a 1274 closing tick that always indicates a short-term top. And I guess he said, I'm pretty sure that indicator comes from you. He said the TTT. I'm not familiar with that at all.
Actually, mine, I got Thinkorswim, came in yesterday, 1122, and that's kind of an exhaustion move to the upside, and that's comes close to highs. Back in the day, I used to do a lot of work on that, but once that tick starts showing up, Matter of fact, we've been having a lot of uptick readings on the close. Yesterday we had 1122, day before 384, next before that 574, before that 472, and actually we have. It's kind of a distribution what's going on. At least the smart money is. So I'm still thinking that's the reason why I'm kind of not super bearish here. I think at worst we're in a trading range, and I think at best that April 7th low probably was a significant bottom. Will that be tested or not?
Sure. I'm
not sure. That's the only thing But from there, we got a potential at least 10% pullback, if not more. Then after that pullback, we're probably going to go back up at least another 10%. So this year, trading wise, because this trade range is so wide, it could be a really good year, even though market in general may be pretty much even for the year. So it's kind of interesting. Probably we're not going to hit probably new highs this year at all, but we're going to have a massive trading range. It's going to probably make a lot of people a lot of money. So yeah, that's what I'm keying on. So actually, over the last 4 years, I've outperformed the market. So this year could be a real banner year. If I get a decent sell signal here, it could be a 10% move. If not, I got another 10% move back to the upside just to match the previous high. So it could, and that's just over the next couple 3 months. Then the big gains usually come towards starting about September, October. So we'll see how that develops, but.
And we have another question as well, Tim, with the gold and silver ratio.
Okay.
It said the current gold silver ratio, obviously we're looking at silver gold, but when you're looking at gold to silver, it's 99.92. They said that the average gold to silver ratio over the last 15 years has been around 79.30. This means that on average, 1 ounce of gold has been worth, and then the 100-year average is roughly 40 to 1. The ratio isn't particularly high. It might indicate an opportunity to buy silver. Conversely, if the ratio is particularly low, it might suggest an opportunity to buy gold. So I think this, John Blay, I think this is kind of what we were going through, right? We're looking at the inverse, right, with silver to gold.
Yeah, we're looking at the inverse. It's just because I like to have it match the price of the issue. So it's going up, then it's going up. But yeah, this is a great value around 0.01. Here, you had this is what the COVID crash. Yeah, this was the COVID crash. You had to buy there, and this one wasn't perfect back in 2000. As the market kind of still went a little lower, but overall, it was I don't know. It looks like about 100% gain still, but only twice before, going back to 1982, has it ever been this cheap. So this is a third time. So I think there's a lot of value. And how high the next rally is, I don't know. It's can it get back to 0.03 or something? Like it did in 2010. Don't know. But it could be a real rewarding. So this is far as silver goes, this is they haven't moved. And I got quite a few different silver stocks,
right? And
they look pretty good chart wise, but they just haven't performed yet.
Yeah, so no, absolutely.
And I'm not selling them because I think this is still a good opportunity. I keep looking at this ratio. I'm thinking at some point this ratio rallies. So if at least double. So,
and I wonder, if what's going on in the interim, right? Like you had all this kind of instability, right? And gold is immediately attractive on things like that, right? And I'm not sure the time lag. I don't usually look at a silver to gold ratio as to when that resolves into the kind of historic ratio.
Going up, yeah.
Right. Yeah.
It's just the attitude of the public, like this. I think there's 12-year cycle between gold stocks and the equity market. I think that cycle is just now turning up. I think these, these ratios, I think will get kind of overpriced once it gets towards the end. So we'll see how that happens. So, but
awesome.
Silver's a good buy.
Total. Tim, thank you so much. Really looking forward to Tuesday as well. So we'll see you then, all right?
See you next Tuesday. Thanks a lot.
Take care, Tim.